Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts.
Hey guys, it's James with the Chart Guys. It's Wednesday, August 9th. Going to do my nightly video on oil. So oil, we lost the 8 EMA here yesterday. Closed below it, and I said I was looking bearish with confirmation when we break below the low here of 48.37. We did break bearish, and so we were using the 4 and 8 EMAs for entries long and short. And the reason why we're doing that is whenever we gain the 4 EMA, so the green line, we'd have nice bull moves, and whenever we lost the 8 EMA, the red line here, we'd have nice bear moves, and that's what we were using. It worked very well, as you can see. Recent history. Let me pull back some more. On these bull and bear breaks, look at this. Bear break, gain the 4 EMA, lose the 8 EMA, 4 EMA, lose the 8 EMA, 4 EMA, lose the 8 EMA, 4 EMA. And anyways, now what we're seeing is some consolidation here. And so instead of using the 4 and 8 EMAs for entry and direction, I'm going to start looking at the price resistances. And we have this candle here on August 1st, where we have been ranging in that range here on the daily. And if you go back where the 4 and 8 EMAs didn't work well, is after this big bull move in oil, we ranged till we had this dump here. And so now what this daily candle here represents here, this with its range, is basically, if you look at the weekly chart, it's creating an inside candle last week. I'm sorry, this week. It's creating an inside candle this week. The high and low is within the previous ranges, high and low. And again, on the weekly, we're still at that downtrend resistance, as you can see, and we're still forming lower highs, high, lower high, lower high, lower high. And so in order to be bullish on this, if we stay in this range, we're going to need a bull break of the inside candle, whatever the high is established this week. If we stay within the range and stay below the recent high of 50.43, we're going to have this inside candle form. And then we're going to break bull of it, and we're going to have to break this recent high of 50.43. And of course, confirming that we're changing the trend here, we'll have to break to a higher high on the weekly, which would break that 52. So I'm going to start looking at the daily now and looking at this price range here based on that August 1st candle. And the high here is 50.43 and the low is 48.37. So I'm going to play the break either above the high of 48.37, or I'm going to break the bear break below the high of 50.43, or a bear break below 48.37. And that's what I'm going to use for oil now, because clearly this 4 and 8 EMA technical trend that we've been using to play oil bear and bull is not working right now, as it ranges in this range. So we'll see what happens. Currently we're getting tighter in our range. So we have this high and low, we have a lower high. Let's see, we have been forming higher lows as well here, and still forming lower highs on the daily. So we're going to break out of this range soon. Hopefully we're not going to stay in this range for a long time as it consolidates in this sideways. So we'll see what happens. So playing the price range here of either breaking the high of 50.43 for bulls or breaking below the low of 48.37. And again, so far it's an inside candle on the weekly, and so we'll see how the week closes out with 2 more trading days. Have a good night, and I'll see you tomorrow.